Okay, with this particular problem, we are going to do both the absorption costing method and the variable costing method, so you can see the differences. It says for the following data for Sox Company, it gives you all of the information. There were no beginning inventories. Calculate the cost per unit for all the production costs. Okay, so the total cost for direct materials is $360. Sorry, my 3 on my computer is sticking. Not 3 million. Direct labor is $504. Variable overhead is $180. And fixed is $360. The number of units produced gives us right here 150,000. I'm just going to copy that down. And then again, we just take the total cost and we divide by the number of units produced. So 360 divided by 150 gives us $2.40 per unit. And again, I'm just going to copy that formula down. So for direct labor, we've got $3.36 per unit. For variable overhead, we've got $1.20 per unit. And for fixed overhead, we've got $2.40 per unit. Other variables, we've got sales commissions of $108,000. And we always use what the sales commissions would vary by. So that would vary by the number of sales per unit, not the number of units produced. So we have 120,000 units sold. And so again, we have to take the 180 cost divided by the number of units sold. And that gives us $1.50 per unit. Oops. Is that right? 108 divided by 120. It's 90 cents. I don't know why. Let me just do it like this. Oh, because I put 180 instead of 108. That's why it was giving me the wrong number. Okay, that's right now. 90 cents per unit. So then we have to just carry down which of these items go under the variable method and which of these items go under the absorption method. Okay, so variable has both direct materials for both variable and absorption, so we're going to put in the $2.40 for both. Direct labor is included in both. So we're going to include that in both of them. Variable overhead is included in both, so we're going to include that in both of them. Oops. Now, the fixed overhead is included in absorption, but it's not included in variable. So $2.40. Okay, this is the variable method, so your fixed cost would not be included in here. So it's going to be either NA or 0. So my total cost per unit, production cost per unit under the variable method is going to be different than what it is under the absorption method, because under the absorption method, our fixed overhead cost per unit is costed out at all of the units sold. Okay, units sold 150,000. But under the variable method, only the variable costs are included. Only the variable costs of production are included. Okay, and now it tells us to create a absorption costing and variable costing income statement. So sales, it told us that we sold 120,000 units at $18 a piece. So 120,000 times $18 each is going to give us sales of 2,160. Under the variable costing, we have production costs of 120,000 units sold times production costs of $696. And then we have sales commissions of 108. Right, so the production costs here are costed out using the $6.96 under variable, because we're doing the variable costing income statement first, times the number of units sold, which was 120, not number of units produced. Okay, so my total cost there, my total variable costs, are going to be $948,200. So my contribution margin Remember, your contribution margin is your sales minus your variable costs. So this isn't your cost of goods sold here. This is just your contribution margin. It's $1,216,000. So what are my fixed costs? My fixed overhead was $360,000. My sales salaries were $72,000. And my administrative expenses was $144,000. So remember, under your variable costing statement, only your variable costs are included up here, and they are included at the number of units sold. And then all your fixed costs are down here. So my total fixed costs are going to be $360,000 plus $72,000 plus the $144,000 gives me $576,000. So my net income is my contribution margin minus my total fixed costs. $640,800 is the net income we get under the variable costing method. Okay? Then we have to do the same thing under the absorption costing method. Sales will be the same. We still sold the same number of units. 18 times 120, that gives us $2,160,000. Oops. Okay, so your sales will be the same. Less your cost of goods sold. Your production costs under the variable is the $9.36. That was the, under the absorption, is $9.36 because it included the fixed overhead. Includes all your overhead, whether it's variable or fixed. And under the variable method, only the variable overhead is included. So that's why there's a difference there. So $9.36 times the 36 cents times the 120,000, can't type, units sold. Let me put some commas in there. That is a little too much. I must have put too many zeros in there. $1,123,200. And so our gross profit is going to be, sorry, I did that on the wrong line. That's why it's not formatted correctly. $9.36 was the absorption cost per unit times the 120,000 units sold. So then to get our gross profit, you're going to take your sales minus your production cost or your cost of goods sold. You're going to get $1,036,800. Okay. And what are our operating expenses? We've got sales commissions of $108,000. I cannot type today. We've got sales salaries of $72,000. That gives us our total selling expenses. If we add these two together, of $180,000. And our admin expenses are $144,000. That was the total admin expenses. So our total expenses, we're going to put over here, are the selling expenses plus the admin expenses. It's $324,000. And when I subtract the gross profit and the total expenses, I get total net income of $712,800. Notice they're different. My net income here is $640,800 under the variable costing method, and under the absorption costing method, I get $712,800. The absorption costing method is the method that we're used to, right? Carries all of the production costs, whether they're fixed or variable. Direct materials, direct labor, variable overhead, and fixed overhead. So why are they different? The next section says, okay, the difference between the two is because of fixed overhead, right? We didn't have fixed overhead in the variable method, but we did have it in the absorption method. Fixed overhead is applied to all units produced under the absorption costing method, and to only the units sold under the variable costing method. So my fixed overhead was $360,000. And we got that right from the problem. Okay, my fixed overhead applied is going to be my 120,000 units, that, because remember, applied is what we actually should have charged to overhead. 120,000 units times the $2.40 per unit. So the difference is $72,000, and that is the difference in our net income between the two. Okay, so this applied overhead is your units sold times your $2.40 under the absorption method for overhead. And if we scroll back up, you can see we had fixed overhead of $2.40. So under the absorption method, your fixed overhead are applied on all units sold. Okay? On all the units produced. And under the variable method, it's only applied to the units sold. So this is just proving the difference and why there is a difference. This amount was given. Okay? So you'll have a problem very similar to this in homework. So hopefully that will help you out. So remember, the absorption costing method absorbs all of the production costs, your direct material, your direct labor, your variable, and your fixed overhead, all four of them. Okay? The variable costing method is your direct materials, your direct labor, and the variable overhead. It does not include the fixed overhead.